Hello, everyone. Thank you for joining us at 10 o'clock on a Thursday when there are tube strikes galore. Really appreciate you turning up. And I'm here to chat with Peter Smith from blockchain.com, who I'm sure you all recognize as one of the sort of really big crypto companies. Peter, how are you doing?
You know, I'm doing pretty well. Obviously, it's a pretty volatile week in the crypto market. But you know, not a directly bad week for us. So that's nice. I think, you know, we're dealing with a lot of sort of very dynamic market conditions and a fair amount of, you know, anticipation of contagion across the space. So there's a whole operational element that goes into that. But, you know, we have a great team, and I haven't had to be that involved in it. I think most of my workload this week has been being on the phone with reporters, investors, and so on and so forth. And so, you know, that's taken some time, but otherwise it's been a pretty standard week.
And in terms of the crypto contagion, I'd be curious to get your thoughts on how far does that kind of extend. When the Three Arrows Capital collapse happened, you know, I know blockchain.com had some exposure to that in terms of the loans that you had out to Three Arrows Capital. Do you have any exposure to the situation happening around FTX at the moment?
Yeah, so we're fortunate that we have, you know, old-fashioned stuff like audit and risk committees, and we're regulated by 3 different regulatory bodies around the world. And so we have pretty defined risk limits. And so we're capable of absorbing, you know, whatever hits the market. I think the challenge, you know, for us post sort of the last contagion was, do we want to be in the lending sector at this moment in time? And the answer for us on that was no. So fortunately for us, you know, we didn't have any exposure on a credit basis to anyone impacted by this, Alameda or counterparties that dealt with Alameda or FTX. And so it's not a very stressful time for us. I think that, you know, the challenge for the whole space when you think about contagion is that FTX and Alameda were extremely active investors in the space. And so it's everything from little things like, you know, that trading counterparty you have, you know, another OTC provider or structured desk, how much money did they have deposited on FTX, right? Does that impact their cash stability position? And then it's sort of secondary impacts that I think will take a long time to work their way through the system. You know, like you've read about a lot of rounds that FTX or Alameda Ventures led into different companies. I think something the market doesn't totally understand is that a lot of times those rounds were trenched out. So if there was like a $300 million investment, you know, it would be 50 or 100 today, and then options to do another 200 in the future. And so the market reads that as, you know, this project or company raised 300 million, that might have only been 50 to 100, right? So there's going to be some of that stuff that's going to take time to flow through the sector as well. And I think generally it's going to take, you know, probably 2 weeks, maybe 3 weeks for anything really bad to float to the surface. And then it's probably going to take, you know, 3 to 6 months for the stuff I just described in the second bucket to kind of work its way up to the top of the water.
And how deep does the downturn go, and how sort of far does the impact spread? You know, it doesn't seem like it's impacted the sort of wider financial markets and wider economy yet, but is there a point where we do get to that being a possibility?
Yeah, so, you know, I've been doing crypto for a very long time, and I've been here for a lot of exchange collapses. The most scary, of course, is Mt. Gox. Who here had an account on Mt. Gox? Raise your hand. Wow, see, we're getting really down to the bottom now. And they had 87% of all trading volume in the world and 25% plus of all the Bitcoin in existence at the time. And that was really bad. You know, on the flip side, FTX was a relatively small venue. They weren't a number one in any category, and they had, you know, lifetime 5 million account registrations, which is, you know, a slow quarter for a blockchain.com or a Coinbase. And then from an active user's perspective, they had a couple 100,000 active users. And so I actually think that the customer impact of FTX will be order of magnitude similar to Celsius, which had more customers, but arguably smaller retail customers. I do think that FTX had a very large public image. I think that's partly because journalists love them, investors loved them, but I'm not sure that there's any sort of fundamental market structure impact that FTX is going to, the bankruptcy is going to have on the market itself. So I'm not kind of expecting that this, nukes the market or fundamentally changes the market structure. The reality there is there's two kings of crypto. One is in the East and his name's CZ, and the other one's in the West and his name's Browne. And that was true 6 months ago, and it's very true today.
And in this Game of Thrones of crypto leaders vying for different sort of parts of the business, I mean, certainly right now it looks like some of these valuations that are coming down, and that there's a chance for sort of M&A opportunities and land grabs in certain parts of the world. What are you looking for at the moment when it comes to blockchain.com? Are you thinking that this is a time to sort of start looking for acquisitions, and could you be the king of crypto in Europe?
I don't want to be the king of anything. For me, crypto and working on it for this long was about a really simple thing, which was human economic freedom. I wanted to build products that let people directly interact with crypto, hold their crypto on chain, and really increase human economic freedom in the world. And we've been able to do that. There's millions of people using the product to do exactly that right now, which is really cool. And I think for us in this market, we're not very M&A focused. We are very heads down, getting ready for the next cycle. So scaling and improving our systems, refining our products, adding support for more assets and more networks natively so that you can use on-chain finance across more networks in our app. And that's really the important mission for us. I think that, having watched a lot of these cycles come and go, I'm also very aware that the darkest part of the night is usually before the dawn, and the crypto gods always demand a great sacrifice before you can move on. And I'm very fortunate and happy that I've never been the great sacrifice, but that's partly because I think we run a very boring business. Ultimately, we just help people buy some crypto and do crypto stuff on chain, and we do that in 200 countries for tens of millions of customers, but we're not the bleeding edge of anything. We are like a utility. We are a market access utility, and it's boring. And that's kind of awesome. And we're the same on the institutional side. We do boring stuff. And so, we're never the hottest company in the top of the cycle, and we're sort of always here for you in the bottom when things get dark and people despair. And sort of the one thing I would say to folks in the room is if you haven't moved your money on chain, it's a good time to do that. The whole not your keys, not your crypto thing, it's real. You should directly have your crypto. It's the whole point of crypto. And as someone who runs a product where you can store your crypto with us, or you can store your crypto with your own keys, I still encourage people to store with their own keys, because I think it's the number one way to be successful in crypto, and it's the thing that makes crypto really unique. If you just want to trade around risk assets, there's other risk assets that you can trade in the world. But if you really want to do crypto, hold your money and hold it with your own keys.
And speaking of markets, obviously there's been a lot of volatility. This week's events alone has kind of driven the price of Bitcoin and various other digital assets right down. But where do you sort of see the market going from here? Is there a time when the ice thaws and the sort of crypto winter, the worst of it will eventually be over? What's your horizon going into kind of the new year and beyond?
There's a lot of great traders in crypto and great investors in crypto. I'm not one of them. If I was, I probably wouldn't be running a boring operating business. So I don't know. Someday. I will say that, when I got involved in crypto, the price was a lot lower than it is today, and it's gone down a lot lower than it is today, and it's gone up a lot higher than it is today. But it's really a long horizon space. Like, you have to be really capable of tolerating the volatility, and you have to really make sure that you're not oversized. Like, you have to manage your risk and be very purposeful and very steady about how you invest in the crypto market, because it is extremely volatile.
And the companies are obviously exposed to that, the fluctuations in prices. So when it comes to a business like blockchain.com, and there was a report in Bloomberg that blockchain.com was seeking additional funding at a reduced valuation. I think it was something like in the range of 3 billion to 4 billion. Can you confirm if those rumors are true? Are you seeking a down round at the moment?
No. So I really don't know how journalism works, but it was kind of funny because we got the call from the reporter, and they were like, "We hear you signed a term sheet between 3 and 4 billion." And I was like, "That sounds really cool, but I don't know about one. My CFO doesn't know about one. My board doesn't know about one. So if whoever has this term sheet could send it my way, that'd be like great." I didn't get it. Still waiting. So, for me, I think I'm a little less attached to, sort of what is up, what is down. Like, I think if we raise capital today, it would for sure be at a lesser price than what we raised at in 2021. Like, let's be intellectually honest. Anything you invested in 2021, except maybe art, is down today. Like, if the crypto market cap goes down by 80%, all of the private companies are going to be worth a lot less money. If Meta goes down by 80% in a year because risk assets are off, your private tech startup is worth less money. Like, this is just how the world works. So, yeah, if we raise money today, it would definitely be a down round because the entire world is down, right? And we are not an aberration to that trend. But no, we haven't raised any money lately. So, whoever has that term sheet, send it my way.
If you're out there, then please do send that towards Peter. Peter, I want to just move on to kind of the regulatory picture here, because obviously after FTX is close to collapse, may collapse soon. What is the impact on the industry and kind of trust in the industry? Is now the time when regulators will sort of, clamp down really hard?
Probably. I think that, what I hope you see regulators do is get away from this distraction that you see in a lot of crypto setups where there's one regulated entity and then there's like another entity that's not regulated. So, one of the interesting things about the FTX saga is, FTX does have a regulated entity. It's FTX US. And that entity has been totally fine. Like, you can still go withdraw from there today. It's the offshore entity, the unregulated entity, that is problematic. And one of the most frustrating parts in crypto and being a crypto entrepreneur is, like, if all your entities are regulated, you can't do some of the spicy unregulated stuff, right? So, as someone who has only regulated entities, I'm hoping that we start to push into a framework where, it's very clear what is and is not regulated and where customers appreciate that. But we've seen this kind of happen again and again and again. And, 2 years from now, we'll be back in the greed phase of the market, and we'll all be making similar mistakes will be made. History kind of rhymes and repeats. One thing before we run out of time, is that actually you on the slide?
Yeah, I believe so.
Really?
Last time I checked. It's a bit of an old photo, but
wow.
yeah.
I think you're better with hair. You have good hair.
Well, I'm glad you agree with my wife on that matter. Yeah, just before we do go, I mean, 20 seconds left. I just wanted to ask you about the UK regulatory picture, because we've got a new government now. Obviously, this is a turbulent time in terms of the kind of political situation here in the UK, but what is your big ask from Rishi Sunak et al. When it comes to crypto?
I think that Rishi Sunak has historically been pretty engaged with the industry and very smart on it. And so I think that I'm hoping it becomes a priority for his government to sort of figure out how we're going to regulate crypto in the UK, but also more importantly, how we're going to build a really vibrant crypto industry here in the UK. And we would really look forward to and welcome that engagement. And so I'm hoping that the UK government stays stable long enough to let that happen.
I suppose we'll have to monitor that very closely and see exactly how that develops. But Peter, thank you very much for taking the time, and thanks everyone for watching.
Thank you.